Today's focus is the impact of the 3-day rule on Tesla that we're headed into this Wednesday. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy this show and would like more information on trading and investing better, as well as private ideas when it comes to trading, consulting, please join us on Patreon. We do have a daily show there that you don't get on the main channel. Next, we wanted to note that this is a copyrighted broadcast. Any reproduction or use of information shared is prohibited. And then also want to thank you. If you like, please take time to like and subscribe. So today I wanted to sort of change our focus. As you know, a couple of years ago, we introduced the concept that we called the 3-day rule. What happened is that I used to work both at Fisher Investments, Forbes Magazine, a number of different places. And one of the things that came up was, kind of a review of the process of how analysts tend to work versus how other people work when it comes to investments. Now, the goal of this show is to sort of anticipate what we're going to see over the next probably 3 business days, maybe longer, related to large institutions and their overall process for how they choose to invest. Now, this is kind of a two-brain show. One of the challenges that's going on in the investment community is that you end up having to get into a process where you wear, I want to say, numerous hats. Those hats could include, obviously, what a hedge fund does, which is they tend to respond to things the same day of the news coming out. That's one group of investors, and that's who we tend to hear from instantly after major news comes out on a stock, particularly as the markets open and pre-market the way we saw it this week. The second group, so that's one group, that's maybe 28 to 30% of the capital out there. And the largest group, with about 60% of the capital, are what are called large institutional investors. Those are pension funds, very large hedge funds, family offices, all these people with huge amounts of capital that they have to manage for a lot more capital preservation, actually, than with a little bit of growth, but not necessarily in that fashion. So the question you always have to ask yourself is, what are the major groups that have the largest dollars in play? A, and B, what are they thinking about? And C, based on what they're thinking about, what might they do? So I just heard a comment from a good friend regarding Cathie Woods at Ark Capitol deciding to sell out of Tesla. And I think it kind of makes sense for one simple reason, and that is that she is a high growth entity. So what happens with most companies is they start out, and where you want to invest in a company is when the growth rate is at its steepest, because that growth rate generates huge amounts of cash. What happens is the bigger the company gets, all of a sudden you have a hockey stick effect where the growth rate starts to slow. And when you're buying stocks in that point, it's not as risky, but then again, it's not as profitable because you've taken out a lot of the risk already. So I believe Cathie's analysis is correct. Stock of Tesla continues to rise, but not at the rate it's been rising in the past, because the more cars they sell, the more established they are, the less risk there is, and therefore more profitable. So what we're concentrating on today is basically this idea of the 3-day rule. I wanted to review the different constituencies in terms of investing, because each of them is thinking about different things. And part of the process that I want to introduce to you and encourage you to think about is to all of a sudden develop like multi-brains. There's what you're thinking about and you have a certain size portfolio, and that's good that you're thinking about that. The issue, though, is that everything happening in the market is going to depend on the degree to which you understand how the larger holders are likely to behave based on every bit of news that comes out. And the more crafty or the better organized you are in the process of understanding and being able to implement these ideas, the better the chance you'll make money out of the whole situation, and not only make money, but be confident in the positions you hold. So, one that comes to mind is we saw Tesla dip back to 720 in those numbers previously as the market took a dip. And what happens is, by your mastery of what the large institutions are thinking about, it gives you an edge, because as other people are panicking, you can actually jump back in and start buying while other people are exiting. An example of why this is important, I just had a conversation with a friend of the show, Dan, today, and he actually pointed out to me, he's like, there are people that think the market's going to crash, and I actually agree with their assessment. There's a problem that's happening right now, which is that, as we talked about 3 weeks ago, everyone wants to be the first one out the door if the news is going to get hugely bad, and then you jump out the window up before other people and you're successful. Well, this is why I recommend you carry a few puts on a regular basis, because those puts will give you the confidence to actually have the capital from selling them to reinvest in good companies like Tesla when that occurs. Notice I didn't say if, it's when. Because nowadays, like in the old days, panic was, we're worried, market drops 250, 300. Now it's, we're worried, market drops 600 to 1,000 points once a month. And it could be a source of revenue for those of you who are long holders. And even if you're not, it might be a source of revenue for people who are shorter holders, but you're anticipating this occurring. I know this is a sidebar, but it's really important that I take time to look at the same object from different angles. So why did I tell him that the market is going to crash? Because guess what? When a market crashes, you have a group of stocks for a good reason that all of a sudden tank. Now, let me ask you a question here as a way to illustrate my point. When you have a market, when you have a key group of stocks that drop, for example, let's take oil. Right now, oil is at $77 a barrel. It's October 5th, 2021. Well, ask you a question. What happens when oil goes to, let's say, 55 bucks, right? Well, there's a company called Exxon. There are all these different companies. 25% of the stock market, particularly the Dow, is oil or oil related. So as a result, if we have a $50 or $55 price on the barrel of oil, all those companies get hit, and it's called sector rotation. People that were in those stocks will probably say, hey, I'll roll to something else while they're getting smashed. On the other hand, look at what's just happened. We've headed from the 65-ish, 67-ish range for oil to now 77, and they're pointing out the highest number in 5 years. I think there's an open question here. Is it legitimately, are the folks at OPEC holding things up, or is it supply chain issues in getting product to market? Nobody for sure knows what that is, but you can say for sure prices at a certain level. There's a new order though when it comes to oil, and the problem is that frackers start making money after 50 bucks a barrel. So if we're going 77, those guys can actually start pumping at a large scale, and they're the ones that caused the U.S. to become the largest exporter or producer of oil in the world, and then start to export because of how much oil they were producing in the fracking process. So the longer we stay in these higher price ranges, the more frackers that can come aboard profitably, and now they're able to start shaping what the price of oil might look like going down the road. Hence why the Saudis actually dropped the price for about 14 bucks as a way to bankrupt as many of those companies as possible, slowing their ability to get back into the market if they chose to do so. So what I'm targeting here is just the idea that we've entered a new realm where there are different sectors of the market that do different things. Like it's entirely possible that oil could become very profitable right now, and entities that rely on oil, for example, transportation companies, are getting jacked because now their overall cost of doing business is rising as the oil prices rise, and they have a harder time making money because they may not necessarily be able to hand off the higher cost of the oil prices to their customers fully, and so they end up getting squeezed in that their costs are rising, but the customers don't want to pay more, and so it's kind of a tough space for transportation companies. So I would expect if oil continues to rise, let's say 90 or $100 a barrel, the transportation companies will get smashed, but the oil companies are going to make a lot of money. So you see what I mean, how one sector could be people rotating into it to get the profits they're generating. Another sector could be a lot of folks getting killed. I also pointed out to him, think about it. There's COVID, and Pfizer and the others who are getting government money to pay for all these free vaccines are having no problem making money. And if the market crashes, they're still going to make money. Hence why so many people, when they do sector rotation, they tend to rotate into drug companies like Pfizer or Moderna or these companies. I think Moderna is more of a pure play on COVID. And I spoke with an epidemiologist who said that expect more variants. So we're going to see those guys actually make a great deal of money. So if we do end up with a 2 to 5% correction driven by the market move, these are a couple of the sectors that I think benefit. And again, I think the transportation companies get jacked because their costs are rising, and they will end up handing off that cost to their customers, but they may be slow to do so. So I'm bringing all this up to you because basically developing a vision of the marketplace through the eyes of people that control large amounts of capital is critical to invest well, especially in environments that shift this quickly. And so I would say then, well, what happens to Tesla in this space? Well, China is still on the grind of trying to reduce its footprint by introducing electric vehicles, and Tesla's a key part of that. Same thing going on in Europe in terms of extra fees to cajole and force both consumers and large vehicle producers to transition over to electric vehicles. So the whole governmental process of moving the electric process along ain't changing no time soon. Hence why I believe that, hey, Tesla's in a great position and pullbacks are buying opportunities. So that brings us to finally, hey, what's up with the 3-day rule in this circumstance? Well, since Tesla entered the S&P and the date they entered the S&P, it's my belief there's a new sheriff in town, and the sheriff's process is quite unique. So what I would say for that is look at the last quarter when Tesla announced record earnings and profits based on the vehicles and nice profit margins, et cetera, et cetera. Basically what happened was the stock price fell. In this case, it went sideways, but you could argue that Tesla's 100, 120 points higher than it was at the last announcement, so it could have sopped up a large amount of the growth rate that you're going to see for the company anyway. Next, I would say that the other thing that's going on here is there's a simple process going on. There's a process where you can defend yourself from your decision making based on good value investing execution. So what we've talked about before is the earnings of the company times its growth rate equals the stock price. So it's entirely possible then that as you are buying that stock, the people that are sort of in charge of managing whether you invest their money or not are going to ask, wait a second, did you buy the stock at the growth rate based on the earnings number, below the growth rate, or above? So Tesla's an interesting company because Tesla has what's called, and I call it an Elon discount. Elon doesn't disclose the kind of information that most corporations do, and so as a result, there's a discount that the stock gets because a lot of people are saying, oh, wait a second, we have to take this discount and on Elon because, well, what if there's something bad that happens and we could have anticipated based on the lack of information that he's providing. So this is one of the advantages about being an owner of a Tesla vehicle, is that there's intuitive research you're doing to determine whether the company is a good investment or not. And the result is you can invest where other people are not. So I bring this up to you because it's my belief what we're going to see over the 3-day rule for this quarter is a nice bump in Tesla stock price, something in the 20 to 50 range, and it could be higher. And what happens is the hedge funds that weren't happy with the stock, just like last quarter, will all of a sudden say, hey, we're happy now because the growth criteria is delivered by the new vehicles coming out. The backlog is seen because there's a shortage of vehicles. You know, they're going to have the product. The only things that fly in the appointment is can they get the chips to fuel the vehicles produced in Germany as well as Austin. And if they can, it's off to the races for the stock in my mind. And we'll learn more about this in general, not specifically when we get into the actual earnings in 3 weeks. So my assessment of things is that Tesla is on a run related to its growth rate. And the exciting thing is with the new factories coming on and the growth of the current factories, I think we end up in a situation of the next year or two where Tesla is exceeding the growth rate that's implied by its current stock price nicely. And large institutions can get away with doing that investing because they know by watching the number of vehicles coming out from these places what the actual number being produced is. And that information makes them more comfortable in risking their jobs and careers on what Tesla's up to. So could this be a non-happen, like market crashes and therefore Tesla goes with it? Entirely a possibility. Could there be a sign for the large institutional holders that they're not happy with where Tesla's at? If that was the case, I think we would already have seen that and have not. And so therefore, it's my assessment that kind of that's where we're going. Tesla's entering middle agehood, where the stock price grows more slowly because they have solid operations that have been doing well, and then people can get happy and comfortable around the company and stock and not have to sweat bullets. So for those of you who are regular viewers, I want to note that we have a bunch of people that have been watching us for a long time, and we kind of have a series of shows focused on different topics. This is somewhat a Tesla trading top secret show as well, because I really think that this is an opportunity to get in Tesla at a great price before we head into a nice power updraft. So I would say, I guess you could do a straddle. That was what somebody asked me about, but here I would say that we're more in an imbalanced straddle where you definitely want to carry some puts just in case things go negative in the short term, but go long term hard or as much as you can to take advantage of the fact that I think we're in a really good fundamentals period for the company in terms of every metric of evaluation is solid right now, except for the mystery of the chips. We're kind of getting an answer from that in that they're not having any issues growing the amount of vehicles produced, even in a tough chip environment. So that's my general assessment of where things are right now, where we're headed over the next several days. Anyway, just a reminder, we do have some SpaceX shares. Please drop us a note, the email address below, or at Teslafaninsight on Facebook. We also wanted to note that there's we also wanted to note that ask you to like and subscribe. Don't forget to join us on Patreon. Final sector of what I want to cover is our usual health tips. I would say that right now, I've told you about my sugar intake modification process, and that's evolving as the less sugar you're eating, the less demand you're getting for it. I would say that I want to just get into forest bathing again, just getting out in nature and allowing everything about it to be a part of your life. Today is going to be interesting because I've been around and recording a lot of birds as they're doing their thing, and We're going to try to integrate that in with the sounds from the ocean as a way to give it a different feel and look in that regard. Don't forget, don't go to bed within 4 hours of eating, minimum 2 hours to let the food digest. Any rate, look forward to your comments on all of this. This is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lehithro, Hebrew, Hoda Hapez, Farsi, Zdravstvuyte, Russian, Ni hao ma, Chinese, Konbanwa, Japanese, Hey Do, Swedish, Namaste, Hindi, G'day, our friends in Australia, and in Jamaica we say, enough respect, man, walk good. Have a great day, and bye for now.